Welcome back to the channel, where we break down a high-yield investment opportunity and uncover hidden gems in the stock market. Today, we're diving into a fascinating high-yield income play, Oxford Lane Capital Corporation, ticker OXLC. This closed-end fund is famous for its jaw-dropping dividend yield and its focus on CLO equity. But is it a safe bet, or does it come with more risk than reward? Stick around as we analyze the pros, cons, and the future of OXLC. Oxford Lane Capital Corporation, or OXLC, is a closed-end management investment company. Its primary focus: collateralized loan obligations, CLOS, specifically CLO equity and debt tranches. Simply put, OXLC invests in pooled loans made to businesses. These loans are packaged into financial instruments, providing investors with income streams from the payments made by the borrowers. The biggest draw for OXLC: its massive dividend yield. 1. As of now, OXLC offers a yield of over 21% annually, making it one of the highest yielding funds on the market. 2. Dividends are paid monthly, providing consistent cash flow for income-focused investors. For retirees or those looking to generate passive income, this is a dream come true. Here's something most investors don't know. 1. Active management. OXLC's team actively manages their CLO portfolio to maximize returns, capitalizing on market inefficiencies. 2. Reinvestment strategy. OXLC often reinvests earnings into new CLO equity tranches, which can compound growth over time. 3. Unique leverage. CLO equity tranches are higher risk but offer enhanced returns, allowing OXLC to maintain its high yield even during volatile markets. CLO equity is a risky asset class, but it provides highly leveraged returns. Here's how it works. 1. Companies borrow money through loans. 2. These loans are bundled into CLOS and sold to investors like OXLC. 3. The borrower's payments flow back to CLO holders, with the equity tranche receiving the highest returns. OXLC profits from this structure, but it's important to note that CLO equity is the first to absorb losses in a downturn, making it a double-edged sword. In the current environment of rising interest rates, CLOS can actually benefit. Here's why. 1. Floating rates. CLO loans typically have floating interest rates, meaning OXLC earns more as rates rise. 2. Demand for credit. As businesses seek funding, CLO structures remain a popular choice for lenders and borrowers. However, higher rates also increase the risk of loan defaults, which is something to keep an eye on. Let's get into some stock price predictions for OXLC, factoring in its high yield and market risks. If OXLC maintains its current dividend payouts but experiences moderate pressure from higher loan defaults, we could see the stock hover around $6.50 per share over the next 12 months. This assumes stable net asset value, NAV, performance and minimal disruption in the CLO market. In a more optimistic scenario, where 1. Loan defaults remain low despite higher rates. 2. OXLC continues to reinvest in high-yield CLO equity successfully. We could see the stock price surge to $8, with a steady 16 to 18% dividend yield making it an attractive option for income-focused investors. This scenario assumes the CLO market remains strong, and OXLC manages its portfolio efficiently. What if the economy strengthens, interest rates stabilize, and OXLC capitalizes on new high-yield opportunities? In this scenario: 1. OXLC's NAV could rise significantly. 2. Increased demand for high-yield income investments could push the stock into the $10 plus range, delivering both capital appreciation and income. OXLC isn't without its challenges. Here's what to watch out for. 1. Economic downturns. If loan defaults rise significantly, OXLC's NAV and dividends could take a hit. 2. Leverage risk. CLO equity is highly leveraged, amplifying losses during adverse conditions. 3. Dividend sustainability. The high payout ratio leaves little room for error, so any disruption in income could impact dividends. Here's something under the radar. OXLC's management team has been aggressively purchasing CLO equity from distressed sellers. This could position the fund for outsized gains if these assets recover in value. It's a high-risk, high-reward strategy that could pay off handsomely. Oxford Lane Capital Corporation offers a unique opportunity for income-focused investors willing to stomach higher risk. Its massive dividend yield is unmatched, but the underlying risks tied to CLO equity require careful consideration. For those seeking high monthly income with the potential for growth, OXLC is worth a closer look. What do you think about OXLC? Are you bullish on its high-yield strategy? Drop your thoughts in the comments below. And don't forget to 1. Subscribe for more stock market insights. Thanks for watching, and I'll see you in the next one.